Hello guys, welcome back to PrizeDr's YouTube channel. This video is in the hashtag investment for dummies playlist, and today I'm going to talk about how you need to start investing if you want to become a millionaire by the age of 40 and be able to retire early starting from as little as $1,000. Investing is the best way to secure your financial future, as it's quick, easy and simple to do, especially with today's technology and apps such as Robinhood and Trading 212, allowing you to invest from the comfort of your own home. The way that I'm going to show you how you can become a millionaire is through taking advantage of ETFs. ETFs stand for Exchange Traded Funds, and it's basically a basket of securities that trade in an exchange, just like a stock. They contain more than one stock at any given time, so it's a type of fund that holds multiple underlying assets rather than one like a stock. Because there are multiple assets within an ETF, they're a popular choice for diversification of your portfolio. If we look at ARK Invest's historical returns on one of their ETFs, ARK-K, they boast an annual return of 29.2%, which is nothing to scoff at when you consider that most savings accounts offer you 0.1% interest per year. Using a compound interest calculator, we can see that if you invest $5,000 into ARK Invest and put in an extra $100 a month into it every month for 20 years, you'll get over $1.6 million in that space of time. So if you were starting to invest and you invested in ARK Invest when you're 20, then you could become more than a millionaire when you're 40. Sounds good, right? Technically, yes, but realistically, as with anything involving the stock market, it's not the best idea to expect similar returns over 20 years, as the stock market fluctuates with time a lot, but you get the idea. Let's look at another ETF, such as f.i.r.e, which is Vanguard's ETF tracking the S&P 500. The S&P 500 tracks the top 500 companies in the world and their stocks and gives an annual return of around 7% adjusted for inflation, or 9% every year. And this has been historically true for over 70 years. And investing into this is more secure, wouldn't you say? The same amount would get you slightly over $100,000. But if you increase the monthly deposit to around $1,300, then in 20 years you could become a millionaire as well. Yeah, that's a lot of money to put in monthly, but instead of putting more money in, if you wait 38 years with a monthly deposit of $200, you can be a millionaire in just 38 years for little to no effort. This is basically investing with barely any effort involved. Many people have found picking and selecting stocks nets them more money in the long term, since it's higher risk but also higher reward. That attitude is totally fine, but requires you to have a lot of time on your hands to do so and analyze the stocks individually, which I believe with the busy lifestyles that we lead is hard to do. Investing in ETFs are also generally more safe. Remember how I said high risk, high reward for picking stocks individually? ETFs are highly diversified across a variety of stocks in order to not have all the eggs in one basket. For example, the S&P 500 tracks the top 500 companies in the world, and if 10 of those stocks went down in price by a large amount, but 400 of those went up, you'd still be in a profit since those 10 stocks only occupy such a small percentage of the overall portfolio. You can also buy into ETFs that specialize in certain industries, such as ARK-G, which is an ETF that tracks the genomic space, and these allow you to have multiple good stocks in a great upcoming sector that you believe in. Remember, this is not financial advice, this is financial edutainment, so only follow this after you feel comfortable doing so. That's it for this video, hope you enjoyed. Let us know what you want to see on Investing for Dummies next. Be sure to give our site a visit where you can earn free gift cards in exchange for a bit of your time. Thanks for watching, and until next time, it's been PrizeDr, signing out.